This morning, we have a report today from our analyst, Joe Gomes, on CoreCivic. And with that, I'm going to turn it over to Joe. Go ahead, Joe.
Thanks, Michael. So yeah, it's clocking today on CoreCivic, stock symbol CXW. They reported very strong fourth quarter results, especially when you adjust for some one-time items, and also talked a lot about the opportunity here with the new administration, given that we are raising our rating on the company to outperform from market perform and instituting a $25 price target. Let's talk about the numbers briefly. They had revenue of $479.3 million in the fourth quarter, which on the face was a 2% decline from the previous year. But if you exclude the South Texas facility, which closed in the third quarter of 24, revenue actually increased 8%. Again, excluding one-time closures, overall federal revenue increased 3% compared to last year. State partner revenue rose 6.4%, and local partner revenue increased 26%. Those were driven by new contracts in 23 and 24. A lot of that was driven by increases in occupancy. Occupancy for the quarter was 75.5%. which marks the highest occupancy level for the company since the first quarter of 2020. And if you look at the bottom line, adjusted net income in the fourth quarter was $18.2 million or 16 cents per share, compared with adjusted net income a year ago of $26.4 million or 23 cents per diluted share. However, that 23 cents includes about 15 cents per share that relates to the California facility that was the lease expired earlier this year, and the South Texas facility that expired in August. So really what we're looking, even though it was a good quarter, is to go forward, here's the opportunities. And a lot of this is, again, coming from the change in administration with the new Trump administration, the big focus on deporting undocumented migrants here. And they talked about that there's a Senate proposal to increase funding for immigration to $147 billion. Just to give a comparison, the total budget for ICE in the government fiscal 24 was less than $10 billion. So that's a significant increase. And given some recent legislation, the Lake and Riley Act, plus some of the executive orders that Trump has issued, the consensus is coming around. They're going to need between 150,000 and 200,000 detention beds. Right now, they're funded for 41,500, so a significant increase in beds. And that is a strong indicator that this is not going to be just a private sector or a public sector solution. You're going to need both the private sector and the public sector coming together to find that number of beds. Obviously, in our opinion, the cheapest and most logistically efficient option is the private sector. In fact, CoreCivic has put forth a proposal to ICE for 28,000 beds, which is a combination of existing beds, restarting some idle facilities, restarting the South Texas facility, which they leased from another company, but they believe they can get that facility back up, and also what they call surge capacity, which is taking existing facilities over 100% of rated capacity, in which you can do by repurposing excess space, at least in the short term. You know, we certainly believe that this is probably the most significant growth opportunity in CoreCivic's history. We think the company is exceptionally well positioned operationally and financially to meet the expected sharp increase in demand for its services. We will, note again that, a lot of this comes down to funding. Again, the Senate has made a proposal, actually has to go through reconciliation and then be signed into law. Management did note that if you restarted their idled facilities and the South Texas facility, which is roughly 15,000 beds, that could add somewhere in the nature of 750 to 800 million of revenue and 200 to 275 million of EBITDA for the company. Now, it does take some time to start an idle facility. Company already is incurring some expense in getting everything set and ready, that if they do get these contracts, they'll be able to hopefully decrease the time frame from a 4 to 6 month time frame to shorter than that. Management did put out some guidance numbers, but with past practices, they don't include any potential new contracts, although they do expect new contracts, for the year. So their guidance does not include any new contracts in that they might be signing here, but it does include expenses that they incur to kind of get to that ready state to go in and reactivate idle facilities. We took a more aggressive approach, so to speak. In fact, by saying, okay, we believe, probably in the first half of this year, revenues are going to be somewhat, in line with the fourth quarter. But we believe, given what we've seen so far from the administration, that some of these contracts could be signed shortly, which would enable the company to start generating some revenue in the back half of the year. And then obviously go forward, this could be a long-term opportunity. There's been some estimates out there that hope to deport about 1 million people a year of the undocumented migrants. There's already an estimate of somewhere in the neighborhood of 11 million undocumented migrants living here in the U.S. So this could be a really long-term positive opportunity for CoreCivic. So again, when we move the stock to outperform from market perform and a $25 price target. And with that, we'll give it back to you, Michael.
Thanks, Joe. And of course, for more information, please take a look at Joe's report on CoreCivic, which also includes disclosures. The report may be found on channelchek.com. Thank you.